Okay, the yuan, we talked about it earlier. I made a very corny joke about it, which I do from time to time. It happens. What does the yuan, what happened with the yuan this weekend? What does it mean for you? To tell you, Jeff Rogo. How you doing?
Good, how are you doing, Paul?
Doing all right. We're doing all right. We're trying to get through the show. It's been a little dicey for me. Steve's doing great. It's been dicey for me. Let's talk about the yuan, what the Chinese did. What does it mean?
All right, absolutely. So the Chinese government over the weekend widened the band that the yuan trades. They're very, they love their currency. They keep it in a very tight range. And here, over the last year and a half, they've widened it over periods of time, and they made a monster effort over the weekend to widen it further. It, this is a currency that's pegged to the U.S. dollar. The hope is over time it could be a global currency, and as it widens, as they create that band, more people can trade it, more people can invest in it, and it basically it liberalizes this currency, which is a lot like the rest of their country has been sort of pushed together by a government.
Still within a relatively narrow band, though, right?
It's a very narrow band, especially given all of the currencies or most other currencies can do whatever they want.
Sure.
It's still a band.
What was the motivation here? I mean, one of the things we've read about lately, obviously, is that the Chinese economy, the surplus that China generates on the trade front isn't as high as it once was. That probably leads Chinese officials to say that the currency is trading at something close to fair value. Yeah. Is that what the market thinks, and was that their motivation?
I mean, that's absolutely a big part of it. I think that you have a situation where if they had done this a year ago, the yuan would have gone up 2 or 3%. It actually was down on the day. At one point, it was down half a percent. So we're looking at really about fair value for the yuan right now, so they're able to do these measures. That said, if you go to the government of the United States, if you go to some other westernized government, they'd say it's their pressure on the Chinese government to liberalize their currency that's done this. I don't buy that, but you're going to hear a lot of that kind of rhetoric already, and you're going to continue to hear that, oh, we're doing something.
How much of it is a response to the economy? I mean, you said the yuan went down, actually. Yeah. It seems to me a lot of nations, when the economy's doing bad, they sort of depress their own currency. Was this kind of a move in that direction? They wanted to get a lower currency, boost their exports, that kind of thing. How much of it was just a response to the economy?
No, I think that's absolutely a big part of it. I think their ability to allow that to be an exchange rate mechanism and allow that to be a cushion when their economy comes to weakness, and sort of when it does catapult, it can help it from creating inflation that's too high. I mean, that's why that's what currencies do. This is this wonderful mechanism that they haven't been able to use. So all of a sudden, that as it widens, as it liberalizes, the Chinese government is all of a sudden going to have a second help that maybe doesn't meet as many government incentives to sort of push and pull their housing market or other parts of their economy that can stimulate or slow down growth when it needs to be there.
Jeff, what does it mean for trading of the yuan? Obviously, it's not a free-floating currency. It's not freely traded in markets around the world, but it probably means something, right? It's much closer to being freely traded now. What does it mean for the markets, for the trading of the currency?
Absolutely. There's two or three things from the trading. I think one is this obviously offshore debt market issue. I mean, obviously the offshore yuan market is something that we've talked a lot about, and as it widens, as it liberalizes, that market's going to grow. And right now, it's really just Hong Kong. And what you're going to see, I think, is New York. You're going to see London. You're going to see other centers come in and be larger epicenters for offshore trading in bonds tied to the yuan. The second thing you'll see is from a trading perspective, it really is an Asia-dominated venue of trading because of where that band is, because you don't know what's going to happen the next weekend. As the band widens, you're going to see that currency a lot more traded in other markets. And so I think what it does is it creates a lot more offshore. That's where you're going to see a lot more of the trading. And while it still has to get settled in China, and you still see the moves and the government's going to make it very much an Asian currency, where it's going to be in 18 months is all of a sudden, just like the U.S., when we're asleep, the U.S. dollar is traded in exorbitant levels. And that could be a situation we have in the yuan in a year.